I wanted to tell this story because honestly, it's one of the craziest cases that I've ever handled. I had this gentleman come in who was actually an attorney, and he had indicated to me that he was a little bit behind on his tax returns, hadn't filed in a couple years, but that he did not anticipate that he was going to owe anything. But he had this when he went to file his tax return, he received an ID theft indication from the IRS. What that means is somebody else had filed a tax return, most likely attempting to get a refund from the IRS. And in this case, I think they actually did use his name and his social security number, his biographical information to get a tax refund. So when he went to go file his own tax refund, that return was rejected, and he ended up filing an ID theft verification with the IRS, which is exactly what he was supposed to do. He indicated to me that he had done that 3 separate times from the IRS, and he didn't understand why he had the audit letter that he brought in. So here's what happened is the IRS gets the fraudulent return. They get 3 ID theft verification letters from or forms from the true taxpayer, and they ignore those and they go ahead and they audit the fraudulent return. And it gets worse because not only did they audit the fraudulent return, but they sent this taxpayer what's called a statutory notice of deficiency. What is that? Well, a notice of deficiency is issued when a taxpayer does not agree to the changes on a tax return or does not agree to the changes in an audit or examination. And so obviously this taxpayer didn't agree to the changes because they were wrong. They were an audit of a tax return that he didn't even file, but they issued him a notice of deficiency and they indicated that he owed $64,538. So at this point, you have 90 days to file what's called a tax court petition when you get a statutory notice of deficiency. And he was still well within that time frame. And I explained to him that we really had 2 options. One is we could continue to fight the case outside of the tax court, jurisdiction, outside of the parameters, but that was risky business because we really couldn't hold the IRS's feet to the fire if we went that route. And then my advice was to go ahead and file a tax court petition. And so we did. And in the tax court petition, we simply alleged that the tax return that had been audited was actually fraudulent in nature, that our taxpayer had filed, ID theft forms in the past and provided them with a good and valid return. Now, you would think that this would be very simple, but it took approximately a year and multiple court continuances to get this case resolved. It does have a happy ending. Ultimately, he ended up getting a refund of $1,649 plus interest. He wiped out that statutory notice of deficiency, that proposed assessment of $64,538. But I tell this story because this is the type of thing that happens when you don't understand what your rights are. He was very fortunate that he came to somebody, actually in this case, a tax attorney, not a CPA or other kind of accountant, because a CPA or a non-lawyer, say, cannot represent you, generally speaking, in filing a tax court petition. And I can't tell you how many times I see taxpayers who used CPAs to help to resolve their tax problems. But when the notice of deficiency came, the CPA didn't advise them of what their rights were, what their options were with regard to filing a tax court petition, and ultimately did not file a tax court petition. And then they ended up in a big mess. Now, it's not fatal. There are things that we can do after that's happened. I can get into that in the context of another video, but in 9 times out of 10, the best course of action is go ahead and file your tax court petition. It stops the proposed assessment and lets you try to get it worked out with the IRS. If you have questions about this or really anything having to do with IRS tax resolution, I invite you to visit our website at getirshelp.com.